Good morning, everybody. Welcome to the Morning Vol Report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to our Morning Vol Report. Take a look at our blog here. It has been a while since I posted blogs. I will start again now that our new website is kind of up and running. Of course, I will be promoting our newsletter, the Breakout newsletter, the Volatility newsletter, the Option Wheel newsletter. So for all of you that want to learn how to trade a certain style, the Vol newsletter I manage for learning how to trade volatility, the Vol products and pairs. The Breakout newsletter Keith manages for learning basically how to trade an explosive gamma position, positive gamma position. And Mark manages the Wheel newsletter for basically selling puts. And we have all of our other mentoring, gold, platinum, professional, basically teaching you how to look at the market and find edge from basically how the liquidity provider does it, but we put it more into the realm of retail trader, because as a retail trader we get to pick price. All right. So if you want to learn how to do that stuff, you can come to Option Pit and learn all that. Today, what do we have? Speaking about edge. All right, so there's basically, I think there's three parts that the market is looking at, and we're just going to look at VIX here. One thing you note about the nature of the VIX over the last few days is this. Trade as high as 21, trade as low as 17. Okay? You know, I'm not a technical analyst, but I would say that's a range. As opposed to what we had not very long ago, where the range was much bigger, right? We actually touched this briefly a couple of weeks ago, and everybody's like, oh, this is all a bunch of crap. Again, most of this, I believe, was caused by a squeeze in the vol products, the inverse vol products. Kind of like a mini meltdown. I'm sure we'll get really what happened, but I think that was a huge part of it, maybe part of it. Bunch of money dumped into some of the short vol products kind of late in the day, so to speak, and these products started to feed on themselves. But you could read about that. But mostly what I'm interested in now, you see this range for vol here to here, right? That's 50 to 20. Now the range is 20 to 35. Now we have a new range here. The new high was 25. We have not seen new highs in vol, and we're settling in at a higher vol. What kind of trades do those look like? I think the market will continue to sort of orbit SPX up and down. Depending on what's going on, I think the next thing is, will bonds hold up? So look at TLT. I think we could make a lot of great pair trades right now on TLT, SPY, and VIX. I'll be doing that in our Gold Lab this afternoon at 3:30 Eastern Time, trying to teach people how to kind of pair those things. That'll also be a subject for our vol newsletter, at least from my point of view. But I think that's really what's kind of wagging. The bond market is the dog wagging the tail of equity market. It's not going away. What I will say, though, is vol does want to kind of get into the 17 handle. It keeps trying. But it has not been able to hold and stay. So the key indicator for this, I think, is really take a look at where the VIX cash is and just keep an eye on where this future is at 1840. We cannot hold any kind of contango for the front month future. So we can't even hold we can't even hold a flat. So until the vol product and the vol traders can get it, or until the future can really hold that level, expect to see like a little more of this choppiness, up and down and up and down. Remember, it's been a while since we've been in a 19 vol market. We're not in a 9 vol market anymore. We're in a 19 vol market, which means we're going to move 1% every day. We're going to go up, we're going to go down, right? There's still a lot of uncertainty around. What we haven't done is, the market hasn't really broken, and vol hasn't really spiked in a few days. So at some point we'll get something what I just call vol fatigue, where the implied volatility is high enough to absorb almost all the moves, almost too high to absorb all the moves, and then you actually see compression of the VIX, and that's when things will start to fall again. When that will happen, I do not know, but you kind of keep looking for those little signals. So some of the signals will be, right, the leaders of the market, the Qs, kind of remain strong. The volatility starts to dampen in there. The bond market stabilizes, maybe around 3% for the 10-year, and all of a sudden then we're in a place where we have no more earnings coming out, and we're again looking for news, right? As it happened so far, earnings in the S&P 500 were extremely strong. So like that part of the market is good. The uncertainty on rates, though, notice that one thing I think which is overall good is you haven't heard a lot from the Fed. They don't mind if the market sells off from 2,800 to 2,500. I think from their point of view, that's one less problem to deal with as a frothy market. So are we going to get up there in any stretch? I think any trade you want is just a trade that you're going to plan on an orbit, right? Meaning you're going to rally a little bit and then back off. We're going to sell off a little bit and then rally again. It's going to kind of, the one-way freight train that we had without a real catalyst up is going to be tough. So any pair just kind of wants those things to happen. At iron condors, butterflies near the money, trades like that are probably going to look a little better right now, keep the duration relatively short, and you might have something. But even selling, I think, longer-term volatility, I think, could be a pretty decent trade right now. So, especially in the indexes. So those are all stuff we can look at in our chat room today. I'll be looking at it in our gold lab. And from that point on, look for our next Saturday class coming up. It is part of your Option Pit Live subscription. You get to attend the Saturday class for nothing. Or if you're interested in it, let us know. But we'll send out more information on that shortly. And with that, I will see all of you later.